Ladies and gentlemen, welcome to another session of Kurgateric Finance and Accountancy Tutorials. We are still on partnership accounts, but before we continue, if you are not subscribed to the channel, please do that and share with as many friends as possible so that they can also get to benefit from these free tutorials. Also, please hit the notification bell so that whenever I upload a new video, you don't miss out. Instead, you get the alert ASAP. So please also like the video, give it a thumbs up, because that motivates me to work extra hard to produce as many videos as possible for our own good. So without much ado, let's go straight to what we are supposed to discuss today. So previously, just kind of a small recap, we say that most of the issues that we are going to see or we are going to handle under partnership accounts, well, number one were final accounts of partnership, and maybe changes in partnership business. We had touched on final accounts. We said the final accounts are like, number one, the income statement, which I told you we are not going to look at the format at the moment because we had already done the format of income statement in our previous tutorials. So if you are not much conversant on the format of the income statement, please visit my previous tutorial on income statement formats, and I've also attached the link on the comment section. Please check. So the income statement, we said, is a statement that is prepared so to arrive at maybe the net profit or loss in the organization. Then we said we have another extension of the income statement when it comes to partnership accounts. It's known as the profit and loss appropriation account. And then number three, we have the current and capital accounts, and number four, the statement of financial position. Which is also known as the balance sheet. Yes, so I'm not going to touch on the statement of financial position at the moment because I had also done it in the previous session. So the link is on the comment section. You will find it there. It will take you to where we had done the format of the format of statement of financial position. So what we are going to discuss today majorly is the profit and loss appropriation account, current and capital accounts. I will handle that in our next tutorial. So again, what we are going to look at in partnership accounts are the changes. Changes in partnership accounts means either, number one, there is admission of a new partner. That means the partnership agreements will change. So that one is a change in the partnership business. And I will show you as we go by in our next tutorials how the accounting treatment or the accounting arrangements for addition of a new partner is done. So keep watch. Then number two, we have another change, like maybe there is withdrawal or death of a partner. If it happens that a customer will withdraw from the partnership business, or there is that natural happening in the organization where the partner has died, then there will be change in how the partnership accounts are presented. So I will also take you through that and how the accounting arrangement is done for the withdrawal of a partner. And then number three is maybe amalgamation of partnership business. Amalgamation means where one partnership business is coming together with another one. So two or more partnerships come together, the partnership companies, so that they can form one and the same thing. They can be one, you can make it one. So amalgamation, from the term amalgamation, coming together. The partnership business is coming together. And maybe number 4 is dissolution. Dissolution of partnership business. Dissolution means if the partners have decided and say that this business or the partnership, we are going to dissolve it, meaning we are going to make it non-existent. So there is an accounting arrangement for how to do the dissolution of partnership business. So all these, ladies and gentlemen, we are going to see all these, each and every one of these one in our subsequent sessions, on your subsequent tutorials. So make sure that you subscribe to the channel and you hit the notification bell so that you don't miss out on any of this. So without much ado, allow me to take you to profit and loss appropriation account, and then we look at the current accounts thereafter. Okay, so ladies and gentlemen, allow me to take you just briefly to the preparation or the format of the income statement of the sole trader. We said that the income statement is prepared to arrive at either the net profit or the net loss of a sole trader. So where the net profit or where the income statement stops, that is where the profit and loss appropriation account for partnership starts. Are you together? So get it right. So in short, appropriation. So from the term appropriation, okay, let me write here. Let's look at the format of profit and loss appropriation profit and loss appropriation account. So I told you, ladies and gentlemen, where the income statement stops, that is where the profit and loss appropriation account starts. So this is what happens. From the term appropriation, appropriating means it's kind of you are sharing this, you are sharing something, right? So here, after arriving at either the net profit or loss, yes, in the partnership business, you've prepared the income statement and you've arrived at the net profit or loss. Remember, these are partners and they are supposed to share the profits and losses as per the agreement they had and documented in the partnership deed. This is what happens in appropriation. The partners are supposed, if this is their net profit or loss, the partners, if you have partner A and B, and maybe they said they are going to share the profits in the ratio of 3:2. So A will get the profit of 3/5 of this XX. Let's say this one is KK. So you get a profit of such. And then B is 2/5 of KK. Yes, so that is what appropriation means. Sharing the profits or the residual profits in the respective profit sharing ratio. But ladies and gentlemen, listen here and listen very carefully. We have some other adjustments that are going to be done here that you are going to do to this net profit or loss before we now come to sharing of the profits. Take note, the profit that is going to be shared among the partners is the profit known as residual profit. Residual means the remaining profit after you've done adjustments of several items that I'm going to list them here. Yes, so some of the items that must adjust this net profit, the items that you are going to add and the ones that you are going to less, so that you find the residual profit that is going to be shared among partners, is what I'm going to show you right away. So let's say this is the profit that from the income statement, the profit of KK. And then we must add, remember I told you from the partnership deed, there is that part of interest on capital, interest on drawings, and partner salaries, and so forth and so forth. So we're going to add the interest on drawings. Interest on drawings. Let's say that is our profit. Interest on drawings, we add it as such. Are we together? So interest on drawings you add. And why are we adding interest on drawings? It is this way, that the partnership business, because it's a formation of more than one partner, and they introduce capital to start this business. So when they want to withdraw some capital, so it means the partnership business or that organization will charge them some interest. So it's kind of the business organization or that partnership organization is benefiting from the drawings that these people are drawing. So that interest is going to add on the profit. It's a benefit to the partnership business. I want to believe that is clear. So that's where we are adding. And then we less the following. Number one, interest on capital. Interest on capital. And why are we lessing this one? The reason is, remember, when these partners were introducing some capital into the business, this is what happened. They introduced the capital in the business, and then they expect that the partnership business will pay them interest on capital they introduced in return. So it means that the partnership business is going to lose some amount of money to interest on capital payments to the partners. That's why we are reducing from the profits. We do it from the profits. So before sharing the profits, the residual profit, you must less the interest on capital, because it's a benefit to the partners and not to the partnership business. So that is why we are lessing. So let's say, let me write here so that, because we have some other items we are going to less. So let's say, again, we are going to less the partner's salary. Yes, this is what I was telling you, that we have that active partner. If the partners are two, and you have one that is most active, so the partnership deed must stipulate the amount of salary that the inactive partner will be getting, maybe at the end of the financial year or monthly, it depends. So you're going to less the partner's salary from here, because it's a benefit directly attributed to the partner. So you are going to less that. So ladies and gentlemen, this is how to do the same. So again, you add the two and then you less from this other side. So remember, this one you add and then you less. In accounting, you less by showing it in bracket. So what you are getting here, what you are getting there is known as the residual profit or loss. The residual profit or loss. So ladies and gentlemen, this is what I was saying. This residual profit is a profit that we arrived at after adjusting this net profit with some items, like adding the interest on drawings, reducing the interest of capital, and also reducing the partner's salary. So what we get now is the residual profit. Now this profit is now the one that is going to be shared. It is going to be shared by the partners according to the profit sharing ratio that is well shown or stipulated in the partnership deed. Are we together? So this residual profit now is what we are going to share to the partners. So we say less profit share. Let's assume it's a profit share. We have maybe partner A and partner B, right? So partner A will get, maybe, if they were sharing in the ratio of 3:2, means that partner A is 3/5 times, let's say this one is KK, so I'm not to confuse, KK, so KKK, and then partner B is 2/5 of KKK. right? So the resultant figure you less from this other side, maybe it's KK. So that is what I mean, right? That is what I mean. The residual profit is the one that is going to be shared. So, ladies and gentlemen, let me take you once again, that the profit and loss appropriation account picks up from where the income statement stopped. The income statement stopped from the net profit and loss, or loss, right? So here we are going, before appropriating or sharing this profit to the partners according to the profit sharing ratio, we must adjust some items, like number one, interest on drawings, maybe partner A and B. Maybe partner A is that figure, right? So you take the figure here. Yes, so to add to the net profit. And then the interest on capital, the same case applies for partner A and B. The partner salary, maybe it's only one partner who is earning salary. So, ladies and gentlemen, that is how to prepare the profit and loss appropriation account. In short, we are trying to get the residual profit that is going to be shared among the partners according to the profit and loss sharing ratio. So, ladies and gentlemen, I want to believe that I have done justice to the profit and loss appropriation account. So see you in the next session, where we shall discuss the current and capital accounts. So until then, it's goodbye for now.